She thought buying the house would quiet the noise. For years, she had told herself that the uncertainty she felt was temporary, that once she owned something permanent, walls, land, a fixed address, the internal restlessness would settle. At 31, she signed the mortgage. 30 years. Predictable payments. Predictable interest. Predictable life. It felt adult in a way renting never had. Her job in corporate legal compliance paid well. Not extraordinary, but stable. The kind of role that does not disappear overnight. Regulations always change. Companies always need oversight. Risk must always be managed. She specialized in preventing problems before they happened. It was a respected skill. Her income supported the mortgage comfortably. She calculated the ratios carefully before committing. Emergency fund intact. Retirement contributions unaffected. Lifestyle adjustments minimal. Financially, it was responsible. Psychologically, it was anchoring. At first, the house energized her, painting walls, choosing furniture, hosting dinners. She liked introducing friends to her place. The phrase carried weight. Ownership creates identity. Gradually, the payments became background. Automatic withdrawals each month. A number that shaped decisions quietly. When a recruiter approached her with an opportunity abroad, higher upside, equity participation, but no relocation package and no guaranteed long-term contract, she declined quickly. The timing was not ideal. She had just refinanced. She had just committed. She had just stabilized. The recruiter understood. Stability filters opportunity. Without announcing it is doing so. Her company promoted her the following year. Senior Compliance Counsel. Larger team, slightly higher salary, performance-based bonus tied to departmental metrics. Her work focused on risk mitigation, contract safeguards, internal investigations, policy enforcement. She was rewarded for identifying vulnerabilities before they became visible. Over time, she began applying the same logic to her life. Every decision passed through an internal compliance filter. Is the downside protected? Is the exposure limited? Is the return predictable? The mortgage amplified that filter. She noticed it in small moments. When friends discussed launching independent practices, she calculated overhead risk instead of creative freedom. When colleagues moved to smaller firms for equity stakes, she focused on volatility instead of potential scale. She told herself she was disciplined, and she was. But discipline can evolve into confinement when obligations grow heavier. At 34, she ran a projection comparing her current compensation trajectory with alternative career paths in adjacent sectors. Regulatory technology startups, international arbitration firms, advisory roles. Her current path was steady, others fluctuated. Some dipped before rising sharply, some never recovered. The mortgage sat in the center of every scenario. It did not demand anything dramatic. It simply required consistency. Consistency influenced her tolerance. Her company underwent a restructuring at 35. Entire departments were consolidated. Some roles eliminated. She survived easily. Compliance was essential. Survival felt reassuring. It also revealed something. Her value was tied to an environment that prioritized risk avoidance. The better she performed, the more the company depended on her to preserve existing structures. Preservation is different from expansion. One evening, reviewing a complex regulatory update alone in her home office, she noticed how similar her professional life and personal life had become. Both were optimized to prevent disruption. Her house required maintenance schedules, insurance coverage, long-term planning, predictable cash flow. Her job required the same. She had built a life where volatility was systematically reduced. There was comfort in that symmetry. There was also a narrowing. She began to sense that her risk tolerance had declined, not because she feared failure, but because she had constructed fixed costs, that punished experimentation. Fixed costs create invisible boundaries. You do not see them daily. You feel them when opportunity knocks. At 36, another offer appeared, this time from a rapidly expanding international firm building a new compliance division from scratch. High autonomy, revenue share, no guarantees. The role required relocation. The housing market in that city was volatile. Selling her home might yield profit, or not. She spent weeks analyzing numbers, transaction costs, tax implications, market timing. But beneath the spreadsheets was a quieter question. Had she built stability to support her life? Or had she built a life that now served her stability? The house had appreciated modestly. Her equity was growing. Objectively, it was a sound investment. Subjectively, it was weight. Not crushing weight. Anchoring weight. She realized something subtle. The mortgage did not just require income. It required predictability of income. That requirement influenced her career decisions more than she admitted. Her colleagues admired her prudence. Her family praised her foresight. She was the responsible one, the stable one. Identity compounds just like debt. The longer you carry it, the harder it is to restructure. She did not make an impulsive decision. She did not list the house overnight. Instead, she reframed her internal metrics. For years, she measured success through stability indicators, savings rate, property equity, promotion frequency. She began adding a new metric, optionality. If her industry shifted abruptly, how mobile was she? If she wanted to pivot sectors, how constrained was she? If she chose to reduce income temporarily, how long could she sustain it without panic? The answers were less comfortable than her net worth suggested. Financial assets had grown. Flexibility had shrunk. She walked through her house one evening, noticing details she once found reassuring. The fixed shelves, the customized cabinetry, the rooted trees in the small garden. Everything was built to last. She asked herself whether she had built the same permanence into a life that might require adaptation. The trade-off was not obvious when she signed the papers. Homeownership symbolized arrival, but arrival can quietly reduce departure speed. She still values what she has built, the structure, the security, the absence of chaos. But she now sees the equation clearly. Every fixed commitment purchases comfort. It also purchases constraint. The question is not whether stability is good. It is how much of it you can accumulate before it begins to negotiate your future on your behalf. She stands in her living room some nights, aware that she owns the house, and equally aware that it owns a portion of her decisions. She has not decided what to do with that awareness. She only knows that the next opportunity will not be evaluated by salary alone. It will be evaluated by how much of her life remains movable. And she is no longer certain that immovable was ever the goal.